Welcome back to Am I Catching a Falling Knife? The podcast where we break down complex market moves into plain English. I'm your host, Dave, and today we're diving deep into a stock that's seen some turbulence, Applied Materials, ticker AMAT. It's been a bumpy ride for AM8 lately, with its price dropping by more than 10% in the last few days. That kind of sharp move always makes you wonder, is this an opportunity, or are we about to grab a falling knife? Let's figure it out. The dominant narrative driving this price action is the company's cautious Q4 outlook. This caution stems from weakened semiconductor demand and ongoing geopolitical uncertainties, especially concerning China, even though they just had strong Q3 results and are well-positioned for the long-term AI boom. So what exactly is Applied Materials? Well, AM8 is a global leader in materials engineering solutions. They provide the crucial manufacturing equipment, services, and software that enable the production of virtually every new chip and advanced display in the world. Their innovations are absolutely critical for advancing AI and accelerating next-gen chips. Looking at their business, about 74.4% of their revenue comes from semiconductor systems, with another 21.9% from applied global services. Geographically, China is their largest market, accounting for a substantial 30% of their revenue. Taiwan and Korea also represent significant chunks. Now, let's break down how this cautious Q4 outlook impacts their earnings. Our analysis shows an estimated minus 10.5% change in quarterly earnings due to this narrative. How did we get there? First, the market's narrative points to weakened semiconductor demand and those geopolitical headwinds with China. This directly hits their core semiconductor segment, which, remember, is over 74% of their business and their largest market, China. Given these combined factors, we're estimating an overall Q4 revenue decline of about 6.0% from what was previously expected. AMAT's gross margin has been holding pretty strong, around 48.1%. Assuming that stays relatively stable, a 6% revenue drop means a proportional hit to gross profit. To then estimate the impact on their bottom line, their earnings, we apply an operating leverage multiplier of 1.75. This essentially means that their net income is more sensitive to revenue changes than their gross profit because they have some fixed operating expenses like R&D and sales costs. So that 6% revenue decline multiplied by the 1.75 operating leverage gets us to that estimated minus 10.5% hit to earnings. Now, I should mention the confidence interval for this is between minus 12% and minus 8.5%. It's a bit wide because while the narrative is clear on the negative impact and the areas it affects, it doesn't give us hard numbers on the weakened demand or geopolitical uncertainties, so we're relying on some reasonable assumptions. To figure out what this stock is really worth, I'm looking at it from two angles, using data I pulled from finviz.com. First, a discounted cash flow, or DCF model. For this, I'm assuming a growth rate of about 8.1%, a discount rate of 9.5%, and a terminal growth rate of 2.5%. Based on those assumptions, our base case DCF value for AMAT comes out to about $152.23. But then, when we apply the impact of our narrative, that cautious outlook and estimated earnings hit, that value drops to around $133. The second method is a bit simpler, a peg-based valuation. This method looks at the price-to-earnings ratio relative to earnings growth. Using this approach, the fair value comes out to about $99.50. So we've got a range of potential values here, from roughly $99 up to $152, with our narrative-adjusted DCF landing at $133. Based on these insights, and considering the current price of around $188, if I were looking to catch this knife, my custom buy levels would be around $152, $133, and potentially as low as $100, aligning with those different valuation perspectives. All right, that wraps up our deep dive into AMAT. Now, a crucial disclaimer, folks, this isn't financial advice. My goal here is to give you the tools and the narrative to understand these complex situations better. Always do your own thorough research and consult with a financial advisor before making any investment decisions. Thanks for tuning in to Am I Catching a Falling Knife? I'm Dave, and I'll catch you next time.